Just continuing part 2 of Speculation is as Old as the Hills, Traders. This is the book written by Edwin Lefebvre, Reminiscences of a Stock Operator, written in, I believe, 1923, about Jesse Livermore. You can read this book and learn a lot more about Jesse Livermore just by Googling him, but reading this book can give a ton of valuable insight into Wall Street and nothing new under the sun. But if we go back even further to the 1700s, we can find out a bit more about Munehisa Hama, who was the original developer of candlestick charts. He was a rice trader and started to take notes of price movement and drawing lines of highs and lows and boxes that delineated where the majority of trading took place, the origin of candlestick patterns. Munehisa Hama wrote a book. He was referred to sometimes as the god of markets. He was a rice merchant from Sakata, Japan, and he wrote a book called The Fountain of Gold, the Three-Monkey Record of Money. And in today's dollar amounts, it was estimated that he was worth approximately $10 billion. And the other book I would suggest people read is Extraordinary Popular Delusions and the Madness of Crowds by Charles Mackay. And that book primarily talks about financial manias or bubbles, and one of the most important ones that he talks about is the tulip bulb mania in Holland. This happened in the 1600s, and this chart basically shows the mania that occurred, which essentially is no different than any other bull market or stock market run-up and then a dump, crash. It's the larger time frame over 3-4 years that occurred with the tulip bulbs. People were literally being able to buy houses with the sale of one tulip bulb. These are from Edwards and McGee, and again, there is nothing new under the sun. We can see this on a 1-minute chart, we can see this on a 15-minute chart, we can see this on a daily chart or a weekly chart. Head and shoulders pattern, a rounding bottom pattern, 1932, 1941, reverse head and shoulders. Again, these patterns will show up on any time frame. 1929. I've talked about getting Schabacker's books, Edwards and McGee, Peter Brandt, classical chartist, but definitely Reminiscences of a Stock Operator, Extraordinary Popular Delusions and Madness of Crowds, and reading about Munehisa Hama. Just painting the picture that there is nothing new under the sun. Speculation is as old as the hills. What's happened before will happen again. And the fact that people still think that their guru or somebody recently came up with these ideas. These charts are from, you'll notice on the dates, 1945. Rounding bottom patterns, these are hand-drawn. These are from the 20s. Head and shoulders patterns. Triangular bottoms. 1935, Charles Dow. Go read about Charles Dow and how the Dow Index was started and who Charles Dow was and what he did. And these patterns are they've been there since the beginning of markets. And so for somebody to be misleading people, telling them that they've come up with these concepts or that there are other certain things, read Reminiscences of a Stock Operator, read Jesse Livermore's books. The quotes in his books, the stories, the explanations of things. The only thing to do when a person is wrong is to be right by ceasing to be wrong. The average man doesn't wish to be told that it is a bull or bear market. What he desires is to be told specifically which particular stock to buy or sell. He wants to get something for nothing. He does not wish to work. He doesn't even wish to have to think. Big movements take time to develop. The desire for constant action, irrespective of underlying conditions, is responsible for many losses on Wall Street, even among the professionals, who feel that they must take home some money every day as though they were working for regular wages. Never average losses. Men who can both be right and sit tight are uncommon. I found it one of the hardest things to learn, but it is only after a stock operator has firmly grasped that they can make big money. Everything you need to know is right there in front of you. The pockets change, the suckers change, the stocks change, but Wall Street never changes because human nature never changes. Another lesson I learned early is that there is nothing new in Wall Street. There can't be because speculation is as old as the hills. What beat me was not having brains enough to stick to my own game. There is the Wall Street fool who thinks he must trade all the time. To anticipate the market is to gamble. To be patient and react only when the market gives you the signal is to speculate. The game taught me the game, and it didn't spare me the rod while teaching. It is literally true that millions come easier to a trader after he knows how to trade than hundreds did in the days of his ignorance. We can look at 1-minute charts and see patterns. We can look at daily charts and see patterns. We can look at 15-minute charts and see patterns. The game of speculation is the same. Buy low or sell high. Keep it simple, traders. Make it simple so that you can duplicate it, focus on your best setups, and keep getting better. So the point of today's video, traders, is to reinforce that everything you need to know to succeed in trading is right in front of you. The only thing stopping you is whether or not you actually have a plan, a speculation approach to trading the markets, or if you're just going there trying to catch moves. And then what's going on between your own ears. I talk about myself walking away from the screen after trades. One of the biggest reasons that traders keep losing money is they keep trading and they keep going. They go back and give everything they gain and give it back to the markets. They average into losers. They don't actually trade setups that are part of their plan. They just try to trade the movements in the market. These are all the things that are in these books. So it's not any guru's recent discoveries of certain things that smart money or big money do or anything else. You can chase all those things, but at the end of the day, what matters is what can you do day in and day out that works for you, that will make money trading in the markets and also ensure that you don't give it back. So hopefully you got value from today's video, traders. Keep it simple. Focus on your best trading setups. Build your playbook. Manage yourself accordingly. Manage your expectations. Know how to manage your emotional state. Know what you're doing when you go to the markets. Like Ed Sakota says, everybody gets what they want from the markets. Keep it simple. 1% better every single day. And may the markets go with you.